Financial success means different things to different people. Some may define it as having enough money to provide for their families and live comfortably, while others may strive for the ability to retire debt-free. Still, others may prioritize having millions to give away and support those in need. Regardless of how one defines financial success, achieving it brings a sense of relief and eliminates financial stress. It means not having to worry about basic necessities such as food and housing. Fortunately, there are ways to increase your chances of financial stability and freedom. One effective method is by investing in assets that have the potential to appreciate in value over time. However, identifying the right assets to invest in requires a combination of knowledge, values, balance, and a clear understanding of one's goals. If you're interested in exploring different types of assets to invest in and gain financial freedom, this is the right place to be. Investing in bonds can be a great way to gain financial success. A bond is essentially a loan from an investor to a borrower, such as the government or a corporation. The terms of the loan, including payment schedule and interest rate, are clearly outlined in the bond. One of the advantages of investing in bonds is that they are tradable assets that can provide a steady stream of fixed income. The interest rates are set in advance, so you know exactly how much you will earn when the bond matures. This predictability can help ensure that your wealth continues to grow. However, as with any investment, it's important to do your due diligence when choosing a bond to add to your portfolio. By carefully researching the various options available, you can select the bond that best aligns with your investment goals. Overall, bonds can be a secure and reliable way of achieving financial success. Investing in stocks can be a great way to grow your wealth. A stock represents ownership in a company, and as an owner, you are entitled to a share of the company's assets and profits. The value of your investment is determined by the number of shares you own and the performance of the company. The buying and selling of stocks is regulated by the government to protect investors from fraud and malpractice. The most common place to buy and sell stocks is on a stock exchange, such as the NYSE or Nasdaq in the US, the London Stock Exchange in the UK, or the JSE in South Africa. With the advent of online trading, it's now easier than ever for individuals to buy and sell stocks directly. However, it's important to do your due diligence and only work with reputable online brokers. Investing in stocks can be extremely rewarding, especially if you invest in a company that is performing well and the stock price is consistently trending upward. This can lead to significant returns through dividends and appreciation of your shares. However, it's important to keep in mind that the stock market can be unpredictable and there is always risk involved. Diversifying your portfolio by investing in different stocks can help mitigate that risk and protect your investment. Real estate, also known as real property, refers to land and anything permanently attached to it, such as buildings. This can include residential, commercial, and industrial properties. Real estate is known for being a highly appreciating asset and has helped many people secure their wealth through buying and holding properties, renting out properties, and building and selling properties. One of the advantages of investing in real estate is that it tends to appreciate in value over time. Buying land in a developing area, for example, can be a smart investment as the area becomes more desirable and more people move in, making the property more valuable. However, it's important to keep in mind that the value of property can also be affected by external factors such as neglect and a lack of development in the area. Real estate can be a great way to achieve financial success, but it's not without risks. There is the possibility of a real estate bubble, and there are many conmen and fraudsters in the field that can lead to loss of investment if proper due diligence is not done. However, with thorough research and laws in place to protect investors, real estate remains a viable and beginner-friendly way to attain wealth. A high-yield savings account is a type of savings account that typically offers a higher interest rate than a traditional savings account. However, it also comes with a higher level of risk. As with any investment, it's important to understand and manage the risks associated with a high-yield savings account. One of the benefits of investing in a high-yield savings account is the potential for a higher return on your investment. The more you invest, the higher the return will be. However, it's important to keep in mind that the interest rate can be affected by the state of the economy. When investing in a high-yield savings account, it's essential to do your research and invest with reputable and established players in the market. If you're looking to gain financial freedom, it may be worth considering a high-yield savings account as an investment option. Collecting items as a hobby can also be a way to gain financial success. Many people are surprised to learn just how valuable some of the items they collect can be, and even if you have to spend money on the collection process, the rewards can be substantial when it comes time to sell. The main risk in collecting is that it can be difficult to predict the future value of items, and there's always a chance that the items you collect may not appreciate in value. This is where research comes in handy. By understanding the current market value of similar items, you can have a better idea of what to expect. There are many types of collections that can be lucrative, such as wines and spirits that have been aged or matured for many years. These can be scarce in the market and can fetch a high price. Pieces of fine art. While purchasing these can be expensive, if you pick the right piece, you can see a significant return on your investment. Vintage cars. Restoring and selling vintage cars can be a popular and profitable collection, though it can be an expensive one. These are just a few examples, but there are many other items that people collect that can appreciate in value over time, such as cutlery, unique household items, clothes, jewelry, and many more. With the right investments and research, collections can prove to be a valuable asset in achieving financial success. A certificate of deposit, CD, is a financial product offered by banks in which a person deposits a certain amount of money for a fixed period of time, usually a few months to a few years, in exchange for a fixed rate of interest. This is a low-risk investment option and can be a good way to grow your money if you don't need to access it for a certain period of time. When you invest in a CD, you purchase it through a bank of your choice. It's important to ensure that the bank has insurance on deposits, so that if the bank were to fail, your money would be protected. At the end of the term of the deposit, the bank pays you the initial deposit plus any accrued interest. Certificates of deposit can be a good way to create wealth, but it's important to note that the interest rate on CDS is affected by fluctuations in inflation rates. During times of high inflation, the interest rate on a CD may be less attractive. A mutual fund is a type of investment vehicle where a group of investors pool their money together under the management of a fund manager. The manager then uses the pooled funds to invest in a variety of assets such as stocks, bonds, and other securities that have the potential to appreciate in value. The returns from these investments are then shared proportionately among the investors in the fund. One of the advantages of mutual funds is that they provide diversification, which can reduce risk for investors. They can also be easily purchased through many brokerage firms, making them accessible to a wide range of investors. Additionally, mutual funds may offer certain tax benefits depending on the type of investment vehicles used. If you are comfortable with this, mutual funds can be a great addition to your portfolio. Private equity refers to capital investment made in privately owned corporations, as opposed to publicly traded companies. Private equity investors typically seek to acquire ownership stakes in the companies in which they invest, which can include both established businesses and startups. The returns on these investments can be substantial, but they also come with a higher degree of risk, as the investor is essentially betting on the success of a private business. Due to the risks involved, it's important for investors to do their due diligence when considering private equity investments. By investing in various assets such as bonds, stocks, real estate, high-yield savings accounts, collections, certificate of deposit, mutual funds, and private equity, we can increase our wealth and achieve financial freedom. It is important to do your research and due diligence when investing in any asset. With the right knowledge and strategies in place, you can make smart investment decisions that will positively impact your financial future.